live here on the Passive Income Podcast with myself and my co-host Joseph Hadaway. Joseph, how are you doing this week?
As you can see, I got my new digs with my pool in the back. I'm doing pretty good.
Awesome. Yeah. So it's been quite the week. There were a lot of earnings calls, a lot of companies, and so I don't know. I guess first we'll kind of start the way we start every week, looking at the closing numbers. After all, this is the weekly close live. And yeah, so I guess just while I pull up the numbers here, go ahead and tell us how did you get that lovely brand new pool installed in the last week?
Well, enough of you ordered the passive income merch from buyinvestingshirts.com. Dave was able to give me a nice payout.
That is an absolutely fantastic plug. I have not even put the link in the description yet, but I will definitely do that for anyone who's watching the replay of this live stream. So yeah, first of all, the S&P TSX Composite. So here in Canada, the Toronto Stock Exchange closing this week at 21,255, which is up from last week. And again, I tracking towards that all-time high of 21,800 or 21,900. There was quite that dip on right there, I believe Tuesday, yes. And then it just recovered Wednesday, Thursday, and Friday. So overall, a very good week on the TSX. The S&P 500, again, closing over 5,000. I believe we talked about this last week. It closed over 5,000 for the first time, if I'm not
Yes,
mistaken. Is that
sir.
right? Was that last
You
week?
are. Yep. I was going to ask you the same question. I'm pretty sure it was. It all kind of seems to run together nowadays. But yes, 5,000 was the record, and we keep chugging.
Yeah, so the Dow Jones Industrial Average, 38,620. Well, let's call that 628. We can round that 0.99 up. And the Canadian dollar, again, closing at 74 cents on the US dollar, right where we've been at the last 3 weeks since
Yeah.
we started the weekly close live. Crude oil, let's take a look at this week. We've been skipping over that one, but 79.22, and yes, that is in USD, and that is on the New York Mercantile. So that's, I guess, interesting. And Bitcoin, again, I do like to look at Bitcoin, although it never closes. And again, this is in Canadian dollars, 70,033.
Just
And
short of
let's keep
52
plugging
USD.
along there because, pardon me?
I would say just short of 52,000 USD for everyone watching here in the States.
Right, right. Yeah. So Bitcoin's been having an amazing run. As we know, there's another Bitcoin halving coming up probably in April. So that is definitely affecting the price of Bitcoin and most cryptocurrencies. And then we'll skip over here to the NASDAQ closing the week at 15,775. Is there anything else here? I guess we don't really. We did look at the
Yeah.
FTSE last week as well, 7711. The Nikkei, 38,487. And if anyone is interested, the Canadian dollar to the euro at just shy of, well, they're 69 cents. So that is those are your closing numbers for the week. And we will soon get into the earnings reports this week. What stood out to you this week? We'll probably just do it similar to last week, where we just kind of go through the Monday, Tuesday, Wednesday, Thursday, and Friday. I know that you want to talk about Lyft, which I
Oh
believe
yeah.
was that Tuesday or Wednesday?
I don't remember either. I think it was Tuesday. That sounds more right.
Right. Okay. Okay. So let's first just get into Monday. There wasn't really a whole lot going on Monday, but the
I think the real question on
kind of get
Monday is, do you want to say it or do I have to?
say what?
Oh, that means I have to say it. I'll let you pull up the thing and then I'll say it.
Okay.
Man, that sure is a garbage company.
That's exactly what total trash company. Such a trash company. It's funny because it's true, right? But Waste Management really is the only. So before open on Monday, I've never even heard of
I think they're a
Monday.com.
CRM, which I gotta say, I think like they reported on Monday, and all I can think is, of course they did. Someone in their marketing department is silently laughing to themselves.
Right? Yeah, yeah. Again, the only one that really stands out here is obviously Waste Management, and yes, they are a garbage company, and yes, we all love the joke, and it is fun to say, "What a trash company, what a garbage company."
Um,
Uh, but how did they do?
they popped. If you're a waste management holder prior to earnings course, you're up like 8.2% on the week, I believe it is. I'll say it. Last Friday, I said waste management was going to raise the dividend. I was wrong. Still a solid dividend stock though. We're getting a
Right.
dividend raise this year. There's no doubt. EPS they beat pretty solidly, and their future outlook was even higher. Let's see. I've got it pulled up in front of me. Yeah, estimated 1.53 a share, came out at 174 actual, so they beat it by about a quarter. Um, that's good. That's real good. And Wall Street liked that. And also, I think the number one thing that pushed them up this week, more than anything else, is their outlook was better than what Wall Street expected for the rest of 2024. Because you look into what's been killing a lot of stocks lately, it's been a down 2024 outlook, mostly due to uncertain
Right.
economic conditions, which I mean, we could even talk about this. I think Japan entered recession this week. So did
Yeah.
somebody else. I don't remember who. So economic outlook across the globe is a little right now. Even if J.P. Morgan lowered the chance of a hard landing in the U.S. down to only 11%. But yeah, waste management. If you for any company reporting earnings right now, if your 2024 outlook is better than what Wall Street said it is, your stock's going to jump
Right.
because you're one of the few with a positive outlook.
Yeah, yeah. Okay, interesting. Let's move right along on to Tuesday, and there's a lot more to talk about on Tuesday. Shopify, Coca-Cola, Moody's, RBI. Then after close Tuesday, Airbnb, Upstart, Robinhood, Lyft, and more. So, where would you like to begin with Tuesday's
I say we begin with Mr. Buffett. Uh,
Coca-Cola?
yes, sir. One of Warren. I mean, hey, they say Warren Buffett invests with his gut, hence Dairy Queen and Coke. I mean, his Coke position doing well. Coke, a solid dividend stock, and also let's see, how did Coke perform on the week? I actually don't know. Down about 0.85%. We'll call that basically flat. They came right in on EPS estimates, 49 cents a share expected versus actual. Still on a buy though, because Dave, you and I talked about this. Pepsi reported last week,
Right,
and their sales dropped for the first time in more than 4 years, and their outlook was a little down. Versus Coke hit expectations pretty solidly. So, in terms of comparing the two largest drink manufacturers in the U.S. and I think in the world too, correct me if I'm wrong on that. Coke seems to have a better grasp on their forward outlook than Pepsi does right now,
right.
which is great for us Coke drinkers. There's two types of people in the world: Pepsi drinkers and people who are correct.
I believe you mentioned that last week.
I'll die on that hill.
I do enjoy my Diet Coke, to be honest, and it's not because, like, I'm it's not that I'm on a diet, I prefer the taste of Diet Coke over regular Coke, that's all.
And then from there we could go on to, I mean, keeping with the before open on Tuesday, Dave, a little shout out from the Great White North and Shopify.
Yeah, well, Shopify and RBI, RBI really being Restaurant Brands International, really being carried by Tim Hortons more than anything, but so it seems to me from what I saw. But yeah, if you wanna start into Shopify first, have at her.
Yeah, Shopify was actually a surprising, and like we're gonna go straight back into waste management here. Shopify beat EPS by a little bit, 34 cents a share over 31 cents, which I mean, they're a tech startup that in the grand scheme of things is pretty much newly profitable. So we kind of expect that EPS to be pretty low for a while, which again, that's fine. More so looking on though, their forward outlook well below what Wall Street expected, and the stock crashed, of course, about 10% on the week.
Right.
Which I mean, it's rough in the startup world right now. And you look at these tech companies. I didn't read this anywhere, but I mean, just kind of speaking from experience, generally, U.S. interest rates and any of your big tech are kind of inversely correlated. The higher interest rates go, the lower big tech goes. Which, I mean, Shopify, a tech startup, they are probably some of the worst hit by market moves. I mean, Apple, Microsoft, Meta, Amazon, Alphabet, we'd probably call more of a blue chip
Right.
at this point. But Shopify being, again, I'm going to keep saying this, more in the tech startup world, U.S. interest rates are at least the highest level I've seen in my lifetime. And when our CPI data came out, I believe it was Tuesday, 3.1% actual over 2.9% expected year over year. That kind of killed any idea of a March rate cut by the U.S. Federal Reserve and put the May rate cut. I mean, it's on life support, in my opinion, at least,
Right.
unless we get some better data fast, which I'm not expecting. Um, so Shopify getting hit hard by those market moves on top of any of their own business operations.
Yeah, you definitely see Shopify hard if you watch as much YouTube as I do, where so many YouTubers are, either like their videos are sponsored by Shopify and they're setting up all of their merchandise through the Shopify store. So
I think
definitely something to keep an eye on in the future. Shopify is not going anywhere anytime soon by the looks of it. So yeah, very interesting earnings on Tuesday. Yeah, moving right along, like I have already alluded to, the RBI Restaurant Brands International. Tim Hortons again really seems to be the one carrying. I didn't really see much numbers about Burger King and the other restaurants in that portfolio, but uh, anything that you saw from that?
I can't. I didn't really follow RBI to be fully honest, so I couldn't tell you. I know Wendy's we got coming up, so RBI might be a good benchmark. If you want to though keep going, I did follow Airbnb this week.
Right. So we're into the after close on Tuesday. Airbnb,
Yes.
Upstart, Robinhood, Lyft, and a few others. And I know uh, you mentioned to me before we went live that you have like a whole lot to say about Lyft, and you mentioned a little bit to me before we went live. But anything, I guess, from Airbnb, Upstart, Robinhood before we get into Lyft?
Yeah. So anyone watching over on the Marketplace YouTube channel, we do a live podcast every Monday with the two co-founders, John and Fa. And I argued with John and Fa. I'm an Airbnb bull. I have been for many years. I really wish I'd bought in at IPO, but I didn't. I think actually it's still down from IPO. No, it's up 125% from IPO. I really should have.
Yeah.
Airbnb up 5% on the week almost. I'm a bull of the business model. They pretty solidly beat EPS expectations for the second quarter in a row. Not second beat in a row. Second one I'm calling a solid beat in a row. And also, once again, we're seeing it. Their guidance was above what Wall Street expected, and they're rewarding that extremely heavily right now.
Right.
Moving into Robinhood. Robinhood's always a fun one as well. Also up, let's see here, 26% or 25.29% on the week. Wow. Also, oh, here's why. So EPS, they were surprisingly profitable this quarter, or I should say last quarter. Hey, shout out Robinhood, which is always a fun one to see because Robinhood gets a lot of the brunt of social media hate, and we could do a whole podcast on whether that is earned or not.
Right.
But they do. They get a lot of hate, and it's the Robinhood stock, at least in my opinion, is that weird middle ground where you can look at like, is Twitter complaining a lot or is the world complaining a lot? And when I see things like Robinhood stock up 25%, newly profitable, it sounds like most of the FUD is the word I'm going to use here that you're hearing about them.
Yeah.
Um, that's
Fear,
all
uncertainty, and doubt.
it's just people complaining on Twitter rather than what the actual broader market is thinking. Like I think my mom holds Robinhood stock, but she couldn't begin to tell you who Roaring Kitty is. Um, but then
Very interesting, actually. If anyone has seen the movie Dumb Money, I just watched it a few weekends ago. A great
that's out.
movie. Pardon me.
That's out now. I didn't realize that was out yet.
Yeah, no, I watched it on Amazon Prime like at least 2, maybe 3 weekends ago. Great cast, very interesting movie, and yeah, Roaring Kitty and the whole GameStop And
The
yeah,
fading
definitely
ink.
Robinhood played a pretty big role in what happened there as well. So
Well, I think you just made my Saturday plans. Well, but I guess they're getting back into our topic. I've been excited to talk about this one. Good old Lyft.
Lyft.
So if you checked Lyft's original 8K, 8K for anyone who doesn't know is the financial document they release every quarter with the trailing quarterly financial results. In Lyft's 8K, they originally said that their profit margins are set to grow by 500 basis points or 500 bips in 2024. That comes out to 5%. Bips are, I was telling Dave before the podcast, bips I think is just a word that people in the finance community say to sound smart or try and sound smart. Well, for Lyft, a company that only lost $24 million in Q4, I think it was 24.2, 25.2, versus they lost over 500 million in Q4 2022. So a company that is very, very quickly approaching profitability. And we've seen with Uber as well, a ride sharing company can definitely be profitable.
Right.
Lyft, I mean, they are 25 million in a quarter for a company the size of Lyft. I mean, we're splitting hairs. They are right there. So a 5% growth in profit margin, that is huge, or in theory would be huge.
Good boy.
Come here. Here, you want to be on the podcast? Come here.
Yeah, so 5%, but there's a but that goes with this, correct?
There's an asterisk right there.
A big asterisk.
Yes, so that 500 basis points was actually supposed to be 50 basis points, which would be a 0.5% growth in profit margin, which is still healthy. I mean, but it's definitely much more in line with what you would expect, especially for a company circling profitability like Lyft is doing. I mean, but let's also go back to that. When investors thought it was a 5% increase, the stock jumped more than 60%.
Yeah, huge run up. You're like, wow, what's going on here? This company was like not profitable. Now they're like going to be showing profit anytime soon.
Showing huge profit, yeah. Which, I mean, let's also go back just like 2 weeks ago. We talked about Meta, who had a huge jump after earnings, and a lot of that jump was because of improved profit margins. We know Wall Street likes profit margins.
Yeah,
shocking, I know. But then when Lyft's CFO came up on the actual earnings call and said, "Hey, that's a typo. We fat fingered a zero, basically."
Yeah, like how do decimal points work again? How does that decimal place work again exactly? If anyone
nobody knows. It's like fractions. Nobody really knows. Oh, I shouldn't say that since my degree is basically in math. Either way, the stock then crashed about 20-ish% from that about 67% high. Wow. Lyft was still up like 35% on the week. So, like, I mean, let's say, yes, a lot of their earnings call is getting overshadowed by this fat thing, but it was a solid earnings call that beat a lot of expectations. And their forward outlook, I'm going to keep bringing that up because it's really the trend right now. Earnings season was way above what Wall Street expected. I think a lot of people got a glimpse into what was a way more solid company than what people expected. So, while the 500 bips is getting the headlines, the truth is Lyft is coming. They're on the up and up.
Right. So even though there was like this big mistake made, it's actually hopefully in like sort of more of the long term, the zoom out view, it might not be that bad.
Oh no, not at all. Again, if they keep up what they're doing now, what they're doing is quite obviously working.
Right. Anything else from Tuesday before we get into Wednesday?
I don't believe so. No, Lyft was my big topic for today.
Okay, awesome. I do appreciate that because honestly, I didn't have really any knowledge of that, and I watch the headlines as much as you do or anyone else, and I just totally missed that this week. So I appreciate you bringing it to my attention. Wednesday before open, Barrick Gold, CME Group, Kraft Heinz, Sony, Generac, Williams. So many there. After close, Cisco, Fastly, HubSpot, Upwork. Anything catch your eye here?
I think we got to talk Mr. Buffett again. Good old Kraft Foods Group, Kraft Heinz, ticker KHC, right. I think. Down 5% on the week. Earnings were, I think, lower. I keep a list. I make a list before we go. No, earnings actually they beat by a penny. We'll call that the hit, but I mean, again, we're talking the forward outlook again, and I hate to
Yeah.
keep sounding like a broken record, but it was down. It wasn't what. Okay, are you going to be good now? I think she's going to be good. It was down from what analysts expected, and as such, the market didn't like it. I mean, on the 14th, which I believe was Tuesday, or was that Wednesday? Yeah,
Wednesday. Today's the 16th. Yeah.
Okay, it was Wednesday at market open, so that would have been reaction to Tuesday's earnings call. Yeah, we saw a pretty big drop, down at 1.7% on the week. Mr. Buffett, get it together.
Right.
I say that when he's got more money than I'll ever have. And the other one I was watching was Sony. Everybody in the chat who's got a PS5. Also down 7.5% on the week. How did they do on earnings? They beat earnings, $2 a share actual versus $1.65 estimated, but I didn't personally tune into Sony's earnings call. Much like most people in my generation, I only really know them as the PS5 guys.
Right.
And from what I heard a lot of rumbling about this in like the gaming community. Is they said the PS5 was near the midpoint to near the end of its life cycle, mostly due to disappointing sales. Which, I mean, like, you think about the PS5's biggest competitor in Microsoft Xbox. Xbox and Microsoft's a whole company. Second most valuable company in the world. Whereas if you look at Sony's income statement, or really their balance sheet, a lot of what keeps them afloat and a lot of what is driving growth in this company is the video game market.
Right.
Similar to like a Nintendo. So if the PS5 sales are hurting, all of Sony's are hurting. Whereas, if the Xbox sales are hurting, Microsoft will just update Excel or something.
Right. And so does that mean there's a PS6 on the horizon?
Maybe, because current gen consoles, I think, are about 4 years into their life cycle. I think that was the 2020 release. Somebody correct me if I don't own an Xbox. I don't own a PlayStation. So somebody correct me if I'm wrong, because I'm not like a huge gamer.
Neither am I, to be honest.
But that seems to be what the hint is. Somebody in the chat, somebody in the comments, if you're watching the replay of this, please correct me or inform me. Somebody, I think we got a comment on Twitter last week. Somebody please tell me. I heard some people say the PS5 sales were down because Sony has no console exclusives. Right. I don't know anything about that.
Yeah.
Somebody's probably screaming at me and calling me an idiot right now, but that's fine. You do that, and you have the right to your opinion. I go outside and touch grass. That's gonna start a fight. But yeah,
I'm only touching snow this time. It finally snowed here yesterday. Like, we've had almost no snow all winter, and finally I have enough snow to cover my grass.
I can't. You and I just need to talk quiet. I mean, it's 65 degrees here right now.
Yeah, that's Fahrenheit.
Yeah. What is that? What is that Celsius? I mean,
it's nice. I don't know.
It's about 18, 19 Celsius.
I don't think it would be that warm. Maybe. I don't know. Somebody...
I did I'm on Google. I did 65 Fahrenheit to Celsius. I got 18.33.
Oh, it is that warm. Wow, that is nice. That is very warm. The only one here on Wednesday that kind of catches my eye, and I didn't see the earnings call or how they performed this week, is Barrick Gold. And the only reason I say that is because that is a Canadian mining company that has been around for eons. And like so many mining companies, they've been up, they've been down, they've been all over the place. So that was just, I guess, my take from Wednesday. After close Wednesday, the only name I even really recognize, obviously, Cisco is a big company, not the food distributor Cisco, the other one.
The telecom.
Right. So Fastly, HubSpot, Upwork, any of those on your radar, or are we just moving along to Thursday?
I want to touch Cisco, and I also want to touch Upwork. Cisco solely because I saw a lot about it on Twitter. Cisco, longtime telecom, been around God knows how many years. A long time.
Right.
Most of no, let's see, you're founded 1984, so more than my lifetime.
Less than mine, because I'm old.
I didn't say it.
No, that's okay.
But anyway, like Cisco's been around for a long time. I was just talking to somebody about this on Twitter. Somebody in, I think, my comments. Cisco, sporting around like a 3.5% dividend yield right now. They seem to be in my opinion, the definition of a blue chip stock.
Right.
Like you're going to get a solid dividend, you're going to get a little bit of growth, but like you're not going to see 40% growth next year. You might not even see 10.
Right.
Like in the telecom, and this is my opinion. Again, somebody comment, tell me that I'm wrong. You're wrong telling me I'm wrong because I'm always right. But tell me that I'm wrong. I'm gonna get as cocky as possible on this podcast until we get 1,000 comments on an episode.
That'd be awesome. Please do it. Do it.
But yeah, Cisco. Yeah, they seem to be in my opinion at least, the definition of a blue chip. You get the dividend, you get what 2-3% growth on the year. What are they up in the last year? Let's see here. They are down 3% in the last year, up 2.3% in the last 5. Nobody's buying Cisco for growth. I think their earnings call doesn't even really matter anymore because if you're buying Cisco, you don't really care about the day-to-day price movement.
Right.
Okay. Also then moving into Upwork. Just a quick question. Upwork shareholders, much like Fiverr shareholders, how you doing? How are things at home?
Ooh.
Not great, huh? Upwork down 40% since IPO, 41% since IPO, and down another 5% this week. Like, I mean, again, I'm going to go in. They even beat earnings. Instead of down 5%, I'm going to kind of go back into my. I like Fiverr as a product. I like Upwork as a product. These stocks should have never been publicly traded.
Right.
Wall Street is going to, in my opinion, not financial advice. I am not licensed. This is solely my opinion. These stocks are going to get hammered forever. And I'll give you this, Upwork is not doing as bad as Fiverr, but when your options are down 40% or 60%, you lost either way.
Yeah, that was actually just mean. How are things at home? Wow, that was like, in all the time I've known you, I think that's the meanest thing I've ever heard you say.
I tell you, and if mean gets comments, then it's working.
Okay, fair enough. You just want like 1,000 comments. That means there's 1,000 viewers and when I said when we get 1,000 viewers, I would actually pay you to be the co-host of the weekly close live here on the Passive Income Podcast, right?
Well, and here's the fun thing. I'm going to sit here and pick all these fights. The only individual stock I hold is Microsoft.
Fair enough. So every other stock you hold is like an ETF or index fund?
VTI, VU, QQQ, yeah.
Which are all great options, especially in the US, right? For Americans to just have those nice baskets, those nice bundles of just everything all in one, right?
Oh yeah, I love it. Again, not investment advice. So I guess you could say I do hold every single stock in the U.S., but there's not a single one of these I actually like care that much about day-to-day movement.
Right. Moving on to Thursday. Crocs, John Deere, Yeti, Wendy's down there. That's the before open. I don't know if you saw any of these. John Deere, we were talking about Caterpillar last week or the week before. Another just incredible equipment company, John Deere. Obviously, so many people. It's such a recognizable brand name, whether it's your riding lawnmower or the excavator on a construction site. But yeah, John Deere, amazing company. Any thoughts on John Deere?
To quote Mr. Joe Diffie, everything needs to come in John Deere green. John Deere also, John Deere is a weird company for me because, like, I look back to their 2019 lawsuit where their right to repair lawsuit, which they lost, which I think we talked about this last week. In my opinion, they rightfully so lost that lawsuit. But like the stock has been kind of, I want to say it's been mixed since then. We're up 120% in the last year. John Deere, it's always been weird to me because I think we talked about this with Caterpillar too. How do you innovate the tractor? Like, what do you do? And apparently,
you'd be amazed actually. Like,
apparently, you strike a partnership with Starlink.
Yeah,
that's the
I'm just going to
answer.
mention,
Apparently,
GPS, and it's pretty crazy if you get into the cab of a brand new tractor these days, or a brand new anything, right? Excavator or any other type of heavy equipment. It's amazing technology going on in these, whether it's John Deere, Caterpillar, or any of the other Kubota's, another great company. So I guess that's how, like you said, Starlink. That's
Yeah.
the key.
I mean, they announced that I think on Monday or Tuesday, so it was right before earnings. That really did surprise me. But yeah, still solid company, very recognizable. Moving on though to Yeti. So I got to ask the same question. Yeti holders, you're probably doing better than the Upwork shareholders, but been a rough week, huh? Or really been a rough couple months since the Stanley Cups took over.
Oh, no, stop. You know I'm Canadian, which means
Yes.
there is only one Stanley Cup.
Okay, so you're going
Actually,
to
there's
talk
three,
hockey.
but that's another story.
Well, was Taylor Swift at the Stanley Cup?
She could be. I mean, it's not coming up till June. Maybe her and Travis will be like, "Hey, let's go to the Stanley Cup Finals."
To be fair, I've heard Travis was actually a heck of a hockey player and could have gone in the NHL. I don't know how true that is, nor do
Oh,
I actually like follow much in NFL news, but I've heard
okay,
probably
that's
from
interesting.
their podcast is pretty good. Highly recommend. Watch this one first though. But yeah, Yeti shareholders, you're down 15% this week. I mean, I don't want to call Yeti a trend because, like, I mean, a few years ago they definitely were. They popped on the scene, and they do make a darn good product for
Yeah,
what they do. Like, I mean, it's way better than like the styrofoam cool you'll get for $10 at Walmart. But I think right now, at least in the short term, Yeti's suffering from not being the hot kid on the market. When I mean, I know she doesn't watch this, so I can call her out. I think my sister's on like her third or fourth Stanley now. I don't think none of them are different. It's just the trend.
right. Well, you tell your sister that your friend in Canada says there's only one real Stanley Cup,
You know?
even though there's actually three. But that's another story.
See, we're all from the deep south, so I got to see if she even like remembers that hockey exists.
Yeah,
Because
she'd be like, "What is the Stanley Cup? What are you talking about?"
like throwback, I lived in Tampa for 2 years, and the first time you and I met, you were like, "Yeah, they won the Stanley Cup." I had no idea. I didn't even know we had a hockey team. And you recently introduced me. Apparently, there's one here in North Carolina too. I just learned that.
Yeah, in Raleigh. Raleigh's in
Yeah,
North Carolina, right?
about an hour down the road from me.
Yeah, Carolina Hurricanes. They won the Stanley Cup in 2006.
Did okay? Well, I definitely didn't know that.
After close Thursday. Did you want to talk about Wendy's on before close, or did you want to get into the after close?
Wendy's, I got just a little to say on them. They did miss earnings and they did get hammered a little bit for it, and their outlook was also down low. Wendy's fast food market kind of rough right now. Looking compared to them like RBI brands, that Wendy's, I don't know, to me has always been a weird stock of like they are pretty big, but they're nowhere near as big as like McDonald's, or you have like Burger King, which is not a standalone company. They're owned by Yum Brands. So it's,
Right.
I mean, to me at least, it's always been a weird. Where does Wendy's fit in? And I think if Chick-fil-A was publicly traded, we'd be able to really have this conversation of like, and from an investment perspective, where does Wendy's fit into the stock market?
Interesting.
And I don't know. They're down 19% in the last year, so apparently I'm not the only one asking that question.
Right. After close on Thursday, we had DraftKings, Coinbase, Roku, and a bunch of others. And I know you definitely want to talk about DraftKings,
Yes, sir.
especially with last week's Super Bowl.
Yeah, more than 68 million Americans bet more than $23 billion on the Super Bowl last week.
Whoa, say those numbers again.
More than 68 million Americans bet more than $23 billion on the Super Bowl.
Wow.
We can also say Penn National reported before open on Thursday. Also a sports gambling stock, not one that I personally followed. But yeah, DraftKings, I mean, I think they are, at least here in the U.S., one of the bigger, more recognizable household names.
Yeah, for sure.
I hate to say this, but I kind of use my parents as the benchmark. I mean, they've got their 401k, a few stocks here and there, but like they don't really watch like market news. They've got other things going on in their life. They don't work in the finance world. So if I can call my mom and be like, name a gambling stock, I'm willing to bet she'd probably say DraftKings. They've got the name. which was actually, though, kind of surprising on the DraftKings earnings call. They did beat earnings pretty solidly. 8 cents a share over 29 versus 29 cents a share actual. So kind of back to the Shopify situation. I mean, we expect an EPS to be low for a newly profitable, really a startup in a lot of ways. So that those EPS beats coming up on the dollar a share, pretty good.
Right.
But surprisingly, of course, the question though becomes with DraftKings is are the Super Bowl numbers priced in? Because obviously I didn't hit the books yet. This is a Q4 earnings call. Q4 earnings, they were kind of middling. They beat expectations, lowered outlooks a little bit. Stocks up about 3% on the week. Not much to talk about. My question looking forward to DraftKings, though, like I said, is how much of that Super Bowl is priced in? And the answer might be all of it. I don't know. We all got to wait and see what happens.
I just had a new idea though for a new segment where we call your mom. Just see what happens.
I'm not even joking. She would love that. She asked
like,
me all
"Hi,
the
mom,
time,
you're live on a podcast. Have you ever heard of DraftKings?" No. Okay, thanks. Bye.
The problem would be getting her to answer the phone.
Oh yeah, because she would like send you back a text like, "Don't call me, text me."
No. I was gonna say I'll call her out. I love my mom, I really do, but her phone is always in the other room.
Oh, right.
No matter what time of day or where it is, it's always in the other room.
Anything else there from Thursday that catches your eye, or are we moving on to Friday?
Could you pull up the list again? I don't quite remember.
Oh no, I can't because I just have the Friday graphic.
Then I say we move on.
Okay, and I only actually have the before.
There are no aftermarket calls on Fridays.
So I only have the before on Friday, which is Air Canada, Cinemark, Treehouse. Honestly, the only name on this company I recognize is Air Canada. I've flown with Air Canada way too many times.
I would hope so. So I'm actually looking them up right now. Air Canada. Actually, I can't find them on my. I know I wrote them down because I planned this podcast out during the week. Believe it or not, everybody at home. Revenue's up 11%. I think they beat EPS, lowered fuel costs, heavy travel. Looks like they had a pretty good day. Down 6.5% today, though, so maybe not.
So as a customer flying with Air Canada, I've had some absolutely fantastic experiences, but like with any airline, you also get the bad with the good, right? So
they're OTC traded. That's why I can't find them. Oh, that's interesting.
What did you just find out? What's interesting?
Air Canada's OTC markets.
What does OTC market mean?
Over the counter.
Yes. What does over the counter market mean?
Yes. So a lot of 1 second. Hey, you two, shut it. Come here.
You do know we're live, right? There you go. So OTC markets, over the counter. And how is that different than
apparently we are messing up their WrestleMania time.
Right.
And my wife's not home, so I can't just let them out in the living room. Okay, yeah, OTC market. So of course you have like your NASDAQ index, your New York Stock Exchange, your Toronto Stock Exchange. A lot of those indexes have requirements to be officially listed on them.
Right.
And for a lot of companies, they want to have their stock traded, but they don't hit those requirements yet. So they go on the over-the-counter market, which isn't like run exactly by a company like like the New York Stock Exchange, but it's a way to get your stock out there and get trading before you hit the requirements to go live on an actual exchange. It's much less regulated, and it's much less official.
So I'm sure that in the past Air Canada has been traded on the TSX. So I'm wondering if at some point over time it's been downgraded.
I mean, that's very possible, and we saw that. I mean, the first stock I hate to use this one as my example, but my first stock that comes to mind is like a Phase Clan who was on, I think, the Nasdaq.
Oh,
Once you get kicked off, I mean, 'cause they have the requirements like your stock price can't be like under $1 for like 2 quarters in a row or whatever it is exactly. Um,
right.
and so yeah, once you hit that and you get kicked off the exchange, but like you still have shareholders out there, you get put on the OTC markets. You'll see it a lot also. Like I know, like the New York Stock Exchange for banks, they have like you have to have like 10 million assets under management or something like that. So you see it a lot with like upstart banks who just they want to get their stock out there, they want to start trading at least somewhat, but they don't hit that AUM yet to be officially traded on the actual exchanges.
Right.
Also, just a fair warning. As someone who has lost a lot of money one time on an OTC stock, it is so much less regulated. There are so many pump and dumps
Right.
because, like, I mean, in theory, you and I, Dave, for just a couple grand, could have an OTC stock company up probably by the end of the month. So, if you're
Oh,
buying OTC, due diligence, due diligence, due diligence.
right. Do your own research and due diligence.
Yes,
And that seems to be the end of the week on the weekly close live, Monday through Friday. If you are watching, if you haven't subscribed yet, please be sure to hit that like and subscribe. If you're watching this on Joseph's channel, I think you got it paired this week. I'm not sure. If you're
I
watching
on it.
on Joseph's channel, please be sure to give him a subscribe as well.
I think I did as well. Honestly, I'm struggling to tell, but we'll fix IT issues on another day.
Right. So yeah, tell your friends that we're here every single Friday at 5:30 p.m. Eastern Standard Time.
Yes,
And
sir.
once we have 1,000 viewers per week, that's when Joseph will start getting a paycheck to be here
Please,
as the
please.
co-host on the
My
Passive
fam, my,
Income.
my family is starving. Please.
Awesome. Hit like and subscribe. Thank you so much for tuning in. And again, Joseph, thank you so much for being here with me every single week on the weekly close live here on the Passive Income Podcast. It's been another
Thank you.
incredible conversation, and I appreciate you and appreciate you for being here with me.
All right, thank you for having me here, Dave.